In this video, I will be giving a quick update on the S&P 500, the US dollar, the EURJPY, USDCAD, and EURGBP. This is the S&P 500 E-mini futures daily chart, and what we're looking at here are time cycles, with the pink time cycle at the bottom coming in at about 7.5 months, the blue cycles coming in at a little more than 2 months, and the orange cycles coming in at about 2 weeks. We can ignore the yellow 1 month cycles for the purpose of this video. As discussed in last week's video, there was some uncertainty between where the trough of the 2 month cycle was coming in, whether or not we would be looking forward to that trough coming in towards the end of May, or if it did already come in. In the prior video, I thought this was the more likely scenario. That has changed. I now believe that the trough came in on Friday the 19th, and the next 2 month cycle should come in around the end of June. There are a couple of reasons for that. The first is that we did, although we only wicked through it, we did take out the upper end of the range that I expected this move to go to, should we still be within this cycle. The second reason is, at this point, we are running out of time in this cycle, and so if we're going to make a lower low, it would have to move really quickly. So there is somewhere in maybe a 1 to 5% chance this plays out if we get a major shock on Wednesday with the CPI data and the FOMC, but that is extremely unlikely. So it does appear as if the prior cycle came in early, and therefore this is the cycle trough. I do still believe we will take this low out towards the end of June, as we do still have time left in the 7.5 long month cycle. But we are nearing a point where we might say this cycle is in. So what would that look like? If we look at the prior 7.5 month long cycle, we had a very similar thing play out where we had some early 2.5 month cycles. And then for the final cycle, what happened is we put in one trough of the 2 week cycle, a second trough of the 2 week cycle, and then the third one failed to make a new high. So the second one made a high over the first one, just like we're looking at right now. Second 2 week cycle has made a high over the first 2 week cycle high, but then the third one did not, and that's when it rolled over and we sold off. So I would expect something very similar to that to play out here. If it does not, should we make a new cycle trough this week and then take this out, I will then consider this to be the more likely scenario where the 7.5 long month cycle is in. Technically, we won't know for sure until this high gets taken out, but we'll be very near that should we take this high out, and we're putting in again a second higher cycle peak. If that's the case, I will actually sit on the sidelines for this 2 month cycle. The reason for that is, by the time we take out this peak, we'll already be halfway through this cycle. While it should be bullish, and so the peak should come in the later half, you don't know exactly when that's going to be, so it's difficult to play that to the upside. I know that may be hard to hear, and anyone who's been watching the last couple of videos probably thinks I'm a perma-bear because I've been bearish for quite some time now. But I promise, even if we take out this low, and this does prove to be the cycle that brings us to the 7.5 month cycle trough, after that I will be returning bullish. I'm still bullish in the long run, and no matter where this pink cycle trough comes in, I am expecting new all-time highs before the end of the year. So the only way I will actually trade this cycle is if this is the scenario that plays out and we start to take out 2 week cycle troughs. So whenever this trough does come in, which I expect will probably be somewhere around the FOMC CPI data release, the only trades I'll take is if we start breaking 2 week cycle troughs, because then I believe this will be playing out and we'll be going down to somewhere in the 4800s. But that may not be the case. And that is why I also like to trade FX, because when the market is not giving you good setups in the indices or in stocks, you can still find them in the Forex markets. So I'll talk about the Forex markets in a little bit, but I want to talk about the short trades that I still have open here, looking for further downside. The trades I've been layering into here, I put on a total of 2 full trades to the downside in this area, and they're down somewhere around 85-90% right now. I actually on Friday just opened half of a position also to the downside, with the expectation we'll probably at the very least sell off a little bit going into FOMC and CPI data. So I will be closing these on Tuesday prior to those potential catalysts. I'm quite certain these are going to get crushed, and these will be down anywhere from 80 to 90%, and I'm hopeful that this half position that I opened up here will recoup just a tiny bit of these shorts here. But overall, I'm looking at losing probably somewhere around 1.8 stops on those. And so while that hurts, again, that's why I also like to trade Forex, because sometimes stocks and the indices go against you. Meanwhile, you can have the Forex trades to help kind of balance that out, and vice versa. And so to show exactly that, we're going to start the Forex analysis with EURJPY before we get into the dollar and how that might impact the rest of the FX markets. This is the EURJPY, and so as I have discussed in prior videos, I made a very nice trade here where I made 3.75 stops, and I took profit expecting this to potentially sell off in a big way, and it did exactly that. Now, last week I discussed how I was expecting more strength in the GBPJPY, and if I was going to take a trade at this trough, it would be GBPJPY. However, as I discussed in 2 videos ago, or perhaps 3 videos ago, similar to the USDCAD, when it was looking weaker than the USDCHF and the USDJPY, I still took the USDCAD because it was finding support at median lines. So even when a currency may be weaker than some other currencies, when you're looking at those currencies against the same currency, in this case the yen, I still like to take that particular trade if it is finding support in the time cycle zone at median lines or lower warning lines. And that's exactly what we got in the EURJPY, whereas if we look at GBPJPY, we were not at the lower warning line. So while this trade would have still worked out, I very much prefer when we are at a zone like this. We also are retesting this zone here as well, but the median lines give a much more comfortable entry point, in my opinion. And so while we do have this median line set, which is prior 2-week cycle initial trough, high and low, and because of the rapidity of this move up and down, it is a modified shift. I do think we will achieve this median line, but again, because I do think there is a possibility this does roll over, I only went for 1-to-1, and I did that also because we have this longer term median line set. It was right at this median line. So as I mentioned in the last video, this pink cycle trough may be in here. It may not be in. As of right now, it does appear like it may be in because we took out a 2-week cycle trough. Here's a 2-week cycle trough, and then the following 2-week cycle trough broke below, and now we are putting in higher lows. As long as we continue to put in higher lows, I will continue to play cycle to cycle on these. But like I said in last week's video, I will not be looking to hold anything super long term for the EURJPY or any of the JPY pairs, even though it does appear as if we may have put in this long-term cycle trough. The other trade I took this week in the FX markets was USDCAD, and this one was a loser. I'll put the 5 SMA on here. So we were bouncing off of this upper warning line that we recently broke out of, and we did so right at this expected trough zone. So, and then we crossed and closed above the 5 SMA. So I opened this up, and then we immediately turned back down. I didn't wait for this candle to close. We had a big wick up here and some good follow through, so I closed it prior to this candle closing. And so that was about a little less than half of a stop that I lost there. So overall, I made a little more than a half of a stop this week in the FX markets. And so again, while that does not counterbalance perfectly the losses in the S&P 500, if we go back to some of the prior trades that I took also on EURJPY, overall, the account is still up. And that's why if you do like to trade the indices and stocks, I think you should consider FX as well, because that also gives you the opportunity, should something like this happen and should this pink cycle trough actually be in, you won't feel the need to FOMO into these in later parts of the cycle. If you are like me, you're short here and you know you're going to close those for losses, you won't feel rushed or feel compelled to try to get into the long side, because then when that happens, that's when the cycle finally does roll over and then you lose again. And so that's why I'm going to feel pretty comfortable. Should this pink cycle trough actually be in, I'll feel very comfortable just sitting on the sidelines waiting for this trough to come in over here. We are on the DXY, the US dollar daily chart. And so as I mentioned in the prior video, I'm looking for this, it's about 5-month long cycle trough to come in. I do think we will make a lower low than over here prior to doing that. And this is another reason why I am expecting the S&P 500 7.5 month long cycle trough to come in the future, because while they don't have to line up perfectly, once the dollar starts to bottom and shows strength, usually the S&P 500 weakens. And if we're going to find this trough here, it should give us some pretty good strength. And so I think that will line up pretty nicely. Again, the bottom in the dollar does not have to match perfectly with the top in the S&P 500, but it adds to the case that the 7.5 month long cycle trough in the S&P 500 is yet to come. I do expect that we will get some type of reaction after the CPI data and the FOMC, and so I'm actually not going to be taking any trades this week until after that happens. I currently have no FX trades open, and I am, as I mentioned before, I'm going to be closing all of the shorts that I have over here, even though the expectation is that we will probably sell off, find our trough, and then continue to sell off. I am going to close those prior to that potential catalyst event, and then the only way I will trade this cycle is if we start to take out 2-week cycle troughs to prove that we are moving back to the downside. Until then, I will not take any other trades on any stocks or any US indices. Because there's not exactly a whole lot to update in this video due to the upcoming potential catalyst events, perhaps on Thursday I will put out a midweek video after we get some more information to see how these cycles are starting to shake out, and so that way we can get a better understanding of what we might expect going forward. Finally, I almost forgot the EURGBP. This is the daily chart, and last week I had mentioned that I would be looking to go short the EURGBP. I'm going to take this median line set off for a moment. What I had discussed was I would be placing a trailing sell stop behind the prior daily lows. I took that off after we closed above what I believed to be the corrective median line set, which is a modified shift from the prior 2-week cycle initial trough to the high to the current initial trough for the 2-week cycle. And that is the median line set I just took off. I put it back on. It is a modified shift. And the reason why I used the modified shift is, as I mentioned, for the EURJPY, we have a very rapid move up followed by a very rapid move down. Anytime you have a very rapid move in either direction, really, the default should be a modified shift rather than a standard median line set. And so what happened is we continued to move up. I expected we would find resistance here, but we actually closed 1 day above it and then a second day above it. After closing 2 days above it and then also starting to run out of time in this 2-week cycle, I decided to remove that sell stop. It would have been triggered the next day, and had it been triggered, this actually wouldn't be a terrible spot for it, because I am expecting bearishness. As if we look very long term, I have this maroon cycle, and then we have these two also pretty long term pink cycles. We have actually double bottomed here, which would suggest we're very likely going to take out this trough here moving forward. And so we have a high, low, high, which gives us this standard median line set. Here's the yellow upper warning line, the median line, lower warning line. And we actually just tagged that and found resistance there. Despite all of that, and again, considering the upcoming catalysts on Wednesday, and yes, even though this is the EURGBP, they can certainly be impacted by US data and policies. I will be looking for this trough to come in and then to see if we can break below that before looking to potentially short this. So I just wanted to give a quick update to explain why this changed. My attitude towards shorting this changed during the cycle, because again, we got very deep into this 2-week cycle, which means there's less time for it to correct. And once you start closing above the median line, it suggests that there is more strength. You should, if it's going to roll over, pretty much just start to find resistance at the median line or tag it and then reverse almost immediately, but we did not do that. So again, decided to remove this sell stop, and I'll be looking to potentially short it in this cycle. But that's all going to depend on whatever kind of information we get on Wednesday. As always, thank you for watching this video, and be sure to subscribe for more.